The equities markets closed in bearish territory yesterday. We know the market closed down by about 58 basis points. Now, analysts are saying the drop in the market was as a result of banking stocks, specifically First Bank, GT Bank, and Access Bank. Now, with me in the studio to take this apart is Jude Chiemeka, the CEO of Chapel Hill Denham Securities. Welcome to the studio, Jude.
Thank you.
Now, inflation figures were out yesterday, up from 12.1% to 12.9%. Now, how much impact do you think these inflation figures had on the market? In fact, we have the CBN saying that it's still going to peak at about 14%.
Well, we did see quite a bit of selling, essentially mostly from the domestic sellers, investors. And just like you said, the figures do reflect quite a bit of apprehension. Obviously, yields are likely to rise in the fixed income market. We're already operating in an environment where fixed income rate yields are somewhere between 14 and 15%. So with inflation figures going up, clearly yields are likely to go beyond 15%. And that is beginning to see, that's the reason why we're beginning to see quite a bit of equities going down as domestic investors continue to sell into the strength of the market.
Now, we're also seeing banking stocks sort of dragging the market down. Now, looking at the performance, analysts say this is as a result of profit taking. What are your thoughts on this?
Well, we've seen quite a bit of profit taking in banking stocks. Don't forget that the sector in the last couple of weeks have run up significantly on account of increased demand from international investors. And so it's quite in line that we're beginning to see quite a bit of profit taking. But beyond profit taking, values were up significantly, which obviously demonstrates the fact that there's a bit of strong buying interest in the market. Nigeria, given its GDP, is still a very good destination. And if you look at the sort of buyers we're seeing, it cuts across geography. So there's still a bit of strong interest in the banks, despite the fact that profit taking is going on at the moment.
I know UBA has been a bank that has been showing quite a lot of profits or gains. What are your thoughts on UBA specifically?
Well, UBA, just based on the profit warning and the losses that we've seen, it does appear they have cleaned out their books. We've seen the first quarter result was very impressive. On the back of that, we've seen the stock rally significantly. So with a clean balance sheet, it does look like the strategy is pretty much clear. And we've seen renewed interest, mostly from international investors, and the stock price has traded from somewhere around 162 to somewhere around 4%, which is understandable given the fact that the Q1 result was very, very significantly up. And we do expect the performance to be sustained in the near term as well.
Now, Dangote Cement, and we know they had a conference call yesterday. How is the market responding to the stock? We have market analysts such as Vativa Capital saying that they're upgrading the stock to a buy, but yet we saw it close flat yesterday.
There's a bit of buying interest in Dangote Cement. We haven't only seen the sort of momentum to drive up the share price, but if you look at the cement industry in general, there's a bit of domestic protection for that sector. So we do expect significant upside in the stock. It's currently somewhere around 114. A lot of analysts believe it should be somewhere around 135. So there's a bit of upside, and we're quite optimistic just on the back of what they have said and all the various strategies that they're trying to implement. It does look like the gas challenge that they had initially is something that is behind them now. So we expect the profit mode to kick in, and we expect the investors to react positively in the near to long term for the stock.
But Ashaka Cement hasn't been performing so well. In fact, we saw it was one of our losers yesterday in the market. Yeah,
we did see quite a bit of, we had quite a bit of bad news in the stock, and I guess that's why we're seeing the stock not performing the way it should perform. There was a fire incident, but detailed report did show that it was a bank within the complex that was blown, so it didn't really have any significant impact on the price. But then again, we've seen the stock price move from somewhere around 8.6 to 11, so there's a bit of profit taking as well, but we do see the stock trading well above where it is, just given what is going on in that sector.
Now, looking at some of the strong performers in the market yesterday, we know the brewery sector, specifically Nigerian Breweries, has also been seeing some good gains.
Yeah, I mean, Nigerian Breweries has traded significantly just on the back of the sort of results we've seen. Q1 was significantly up, over 26% profit after tax, and that continues to drive the stock price. Bearing in mind also that a lot of internationals are focusing on consumer goods in Nigeria, so that gives it a clear surge in terms of interest. However, what we do see is the PE is trading somewhere around 22%, which is slightly above the market average of somewhere around 12.7. and forward PE for the market 2013 should be somewhere around 10.7. So there's a bit of concern, and perhaps that's why we're seeing the stock slowing down a bit.
Now, we're also seeing some positive news coming out of the FMCG sector, specifically Dangote flour. I mean, there's speculation that Tiger Brands is planning to buy a stake in this company. How has this impacted this stock?
I mean, the news of that is great. I mean, there has been a lot of focus on fast-moving consumer goods, just based on the sort of results we've seen from the regulars there. Nestle is up significantly, profits. Turnover was up by over 41%. Cadbury profit after tax Q1 was up by over 95%. And that sort of news, it's a welcome development. We've seen the stock gain consistently in the last couple of days, over 20%, and there's still a bit of significant interest. Even though we haven't really seen clarity in terms of how that is going to work, but clearly there's a bit of interest in that particular sector, and Dangote flour is one of the favorites at the moment.
Now, I do want to ask about this news about the Investor Protection Fund coming out of the NSE. They're saying they're setting up a new board of trustees. How does the market feel about this news? I mean, they're saying 635 million in this fund as of December 31st.
It's always been there. I mean, it's one of those things that the market is very aware of, and they're very, very comfortable about it. Historically, the Investors Protection Fund is a contribution made by the daily members of the exchange in case of insolvency of a particular daily member, just to help to protect investors from getting hurt in any particular way. I mean, $5 billion, it's not insignificant compared to sort of losses we've seen from when the market was 62 in terms of the index, down to where it is now at 22,000. But we think it's a good development, and having renewed the board now, we think the monies should be properly managed and obviously provide investors the sort of confidence that they need. Anything that is geared towards investors' confidence is obviously a welcome development, because the market does really need a bit of confidence at the moment.
Now, lastly, we've seen the markets, I mean, it was down 31 basis points on Monday, down 58 yesterday. What is your outlook for today? Do you think that we're going to continue to see this sort of bearish performance?
You're right. I mean, the FG, don't forget there's an Asian auction today. The DMO is trying to raise about 70 billion naira. We do expect the market to continue to trade south, just given the fact that interest rates are supposed to climb, and also given the fact that domestic investors have not really been very active in the market. They've been coming and enabling a bit, but with the sort of inflation figures we're seeing, we expect the market to continue to trade south in the moment. But having said that, there's a bit of international interest, just underpinned by the fact that Nigeria is perhaps the second largest economy in Africa. And if you look at it, if they do rebase the GDP, Nigeria is said to be somewhere around 320 billion. And that will make it one of the biggest economies in a couple of years in Africa. So there's a bit of interest in the country, underpinned by the fact that the price of oil is somewhere around $110 and is projected to remain so. So we do expect the positive reforms that are going on in the government to sustain the sort of robust growth we see in the economy. Despite the fact that IMF has revalued sub-Saharan Africa growth from somewhere from 5.9 to 5.4, we're still very optimistic that Nigeria will maintain a 7% GDP growth. So that's a good thing for the country.